All right, well, when we look at the tech world, or even at large companies in general, Apple stands out as a cash-generating machine. It has the largest cash pile in the corporate world at a whopping $231.5 billion. And while that cash pile was lower for the first time in 7 quarters this past quarter, Apple doesn't seem to be hurting for money. Nevertheless, it's having a tough time breaking into the world's 3rd largest smartphone market in India. So I asked our next guest, Max Wolff, chief economist at Manhattan Venture Partners, about what seems to be the big challenge for Apple when it comes to breaking into that market. Here's what he had to say.
In India, where we have a lot of competition at the lower end of the smartphone market, companies like Micromax, where the Flipkarts and the Amazon Indias and the Snapdeals are doing well, the bottom line is people are very price sensitive. The average person doesn't have an enormous annual income, and Apple products are premium and expensive. Apple had been making slow, steady inroads into India, but the last quarter was one of major reversal. I think the problem is that it's an Android space big time in India, and that folks are very price sensitive. And you can get a very good smartphone in India for $50 to $100, unless you need an Apple. Then you're looking at paying potentially 20 times that. And for a lot of Indians just getting into the smartphone business, Apple's ask price for their premier products is probably north of 1/3 of the annual earnings of a person in the country. So they've priced themselves out of the major market segment in India.
Yeah, I mean, if they're looking at a phone that's $400 or $50, probably going to take the $50 phone. So the question is, what does Apple do? I mean, does it respond with a cheaper version of the iPhone?
So what Apple's done historically is, yeah, they have that cheaper version, so we already see the CE model out there, but even more so, they sell 1 or 2 generation old phones into the Indian market because Apple is still a status symbol there. So when you and I are queuing up perhaps a month or 2 from now to buy the iPhone 7, there'll be a brisk sale in the 6 and the 6S in India. So the earlier models solve part of that problem. And otherwise, what they've done so far is concede market share. Not sure they always want to do that, but historically, you're either selling an older unit, you sell a lot of remanufactured, so sort of spiffed up and brought back, or you just don't sell that much. And unless they're going to push down the price, I think they're not going to sell that much. The truth is, in consumer electronics, there's always a trade-off between margin, how much you can charge more than it costs you to make, and market share, how many people you can get to buy your item. Apple's tremendous success is they had a little bit of both for a long time. They charged a premium price, and they also had massive market share. Looks like India, as well as China, just aren't going to be as kind to that strategy as maybe Western Europe, Japan, and the United States historically were.
Yeah, you mentioned China. We know that's the other smartphone market that Apple is heavily invested into right now. How would you compare where India is today and where China was, say, 10 years ago? I mean, are the challenges of breaking in the market somewhat similar?
Yeah, I mean, India is more open to competition. China has much more resource nationalism, and the sort of official regulations in China are more of a headwind. India, you could have some regulatory issues having sometimes to do with local authority corruption, and it's just simply much less affluent. So China is a wealthier country than India. I do think India is probably poised for enormous growth. Although they're way ahead of where China was 10 years ago, they might be more like where China was 4 or 5 years ago. But the Indian market is showing a huge preference for the free Android operating system because it means you can get a lower price point. And we're seeing real phones come on that market under $50. And with the marginal person coming into the smartphone space being a lower income later adopter, they're incredibly price sensitive. And unless we see change from Apple, it's unlikely they get there. China has a huge middle class, has a much higher average GDP per capita. And even though the last quarter or 2 were very rough, particularly as the Chinese government seems to be less encouraging of foreign producers, Apple has still become a universally recognized premium brand, and only the United States ships more units than China. So China is the 2nd most important retail market in the world for Apple.
Yeah, and while foreign brands are having a problem, stateside brands in China are doing really well, including Alibaba. And we recently got Alibaba's 2nd quarter earnings. Pretty amazing. I mean, overall revenue grew by 59%. Mobile revenue more than doubled. Are these numbers good enough to make you question whether a quote-unquote Chinese slowdown is even in play?
Yeah, so I think we see some Chinese slowdown. I'm not sure that's up for questions. But I think, look, Alibaba is a juggernaut. It dominates e-commerce completely in China. And it's at the crossroads of the most powerful shaping trends of the future, probably of the globe, definitely of China. The rise of mobile, the rise of consumer spending in China and the excitement about new digital payments. So Alipay or Ant Financial, the fact that this is the dominant e-commerce play, and the fact that entire generations of people are coming online. People in the West tend to forget that in places like China and India, e-commerce is a better business even than it is in the West, because when you go online in China, you may not be choosing to go online instead of choosing to go to brick and mortar. There may be no brick and mortar alternative or not much, because in tier 2 and tier 3 cities, where Alibaba's growth is most impressive, you're competing against very underdeveloped internal brick and mortar retail. So they love their smartphones, they're online, they love Ant Financial and Apple Pay. Alibaba has everything for them, new goods, used goods, and it may not have as much competition as you think because they don't historically have a big middle class and they don't historically have a high consumption spend. The average Chinese historically has been much more of a saver than a spender.
Yeah, so it might not even be about what's necessarily more convenient, it's just what's available to you. What do you see, though, as the biggest challenge yet for Alibaba overtaking a company like Amazon? I mean, do you think it's only a matter of time?
Well, they could overtake in raw sales. Amazon is a truly global enterprise. Well, the $64,000 question for Alibaba is, as great a story as it is, and it doesn't need to go anywhere else to be a great story, can they be outside the Chinese market? We know they have a little bit of a safe harbor, having better regulatory relationships with their own authorities. Can they compete in the open market? Can they win market share? Can they become as dominant and powerful outside that particular and somewhat protected geography, China, as they are there? That's the $64,000 question. But there's no question that the world is now copying innovations taking place in China across the tech landscape, including Alibaba, but also Tencent and Baidu and other companies. And it remains to be seen, but it's likely that we're going to see basically another few years before Alibaba could exhaust the enormous China opportunity. And then we're going to see them start being on the world stage. And they're already very acquisitive. They already own a lot of assets outside of their home market in China.
Yeah, well, Alibaba is spending a lot of time now beefing up its cloud computing arm to do exactly that. I mean, recently it said it would partner with international tech companies. And it actually offered, it took an extra step. It said, we will partner with you and we will offer to you our services to help you navigate the country, to navigate the tech terrain. And that announcement came, interestingly, just after Uber's decision to sell its Chinese operations to competitor Didi Chuxing. Other American tech companies have really hit some roadblocks in the country. So my question is, I mean, what is it, do you think, that really makes China such a challenging market to permeate?
Well, first of all, China has its own dynamics. It's a huge market, so everyone hurls themselves at the door there because the prospect of winning that market is so enormous, right? But two, American companies historically have trouble all over the world when they try to too uncritically assimilate or bring in American models to other geographies. China is a very particular market, and the playing field in China is hard to learn and can sometimes be quite nationalist. So the Chinese authorities tend to have been in a somewhat nationalist moment of late. But if you get it right, China has been great to many Western companies, including Western technology companies. But it's hard, and you can't afford much misstep. And if you are in an area that the Chinese government or the Chinese people deem national pride or national security related, I think the headwinds are quite strong, and you need to be patient and long-term, learn the market, show you have an offering to that market, and wait it out. And American publicly traded companies are under a lot of pressure, and they're not always able or particularly adroit or particularly gifted at playing long ball, taking their time, losing money, and figuring out a market. The short-term nature of Wall Street opinion makes that very difficult.